Hi, I'm Damian Mano from SB1 Federal Credit Union. For many, if not most homeowners, their mortgage payment represents the largest expense that they have every month. Their entire budget revolves around that payment. So in today's low-rate environment, the question inevitably comes up, should I refinance? Well, here are some common answers to some of the common questions that we get about mortgage refinancing.
Hello.
Hi.
I'm paying 5% on my mortgage. Is it worthwhile for me to refinance?
Most likely. Current rates are at historic lows that we may never actually see again. If you're currently paying 5% or higher on your mortgage, you can probably refinance, get a lower payment without extending your term. Or if you're comfortable making the payment that you're making now, you may even be able to significantly reduce your term, which is going to save you a lot of money on interest.
I'm looking to sell my house in 2 years. Is it worth it for me to refinance?
Probably not. If your purpose in refinancing is just to lower your monthly payment and you're going to be selling the property in 2 years, you're probably not going to have enough time to recoup the closing costs that you're going to be spending, or you're just going to break even. If you're not sure about selling or when you may be looking to do it, why don't you give us a call? The more information you have, the better decisions you can make for your financial future.
I have an FHA loan with PMI. Is it worth it for me to refinance even if my rate's not going to be significantly lower?
It may. FHA PMI lasts the entire life of the loan, so you won't get rid of it until the loan's actually paid off. On the other hand, credit union PMI actually costs less than FHA PMI, and it automatically comes off once the mortgage balance hits 78% of the property value. Credit union PMI could even be removed sooner if a property appraisal shows that you have at least 20% equity in the property.
I want to pay my loan off sooner. Should I just keep making additional payments to principal, or should I refinance into a shorter term?
Well, that depends on your current rate, your remaining term, and then the closing costs involved with refinancing. For a side-by-side comparison of what you're paying now versus what you would pay for a refinance, why don't you contact us? You don't have to submit an application just to know if it's going to be worth your while.
I want to roll my credit card debt into my mortgage. Should I do it?
Well, there are benefits and drawbacks to consolidating unsecured debt, particularly credit card debt. The immediate benefit is that your monthly payments are going to be lower, and you're probably going to be paying a lower interest rate than what you're paying now on that debt. The drawback is that you're probably extending the term of that debt, and you're using the equity in your home for something other than making improvements to it. In some cases, a debt consolidation loan or even an equity loan may be a better option for you.
What am I looking for as far as closing costs?
Well, closing costs generally run between 1% and 5% of the mortgage amount, depending on the size of the loan. Now, if you have enough equity in the home, you can roll your closing costs into the mortgage and pay nothing out of pocket. In some cases, you may qualify for lender-paid closing costs in exchange for a slightly higher interest rate.
How long does the refinance process take?
It usually takes between 30 and 45 days from the time you sign preliminary mortgage disclosures to the time you're actually at the settlement table. Your mustache.
What about it?
Nothing.
You know, if you grew a mustache, we'd be twins.
Oh, let's not do that to the world. For some, refinancing may be a great option that saves you money and may even reduce the term of your existing mortgage. For others, it may not make the most financial sense in the long or the short term. How can you tell the difference? Well, give us a call or send us an email today, and we can find out what works best for you.